Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 30th day of March, 2020, and this is the daily report for gold and silver. We did see slightly lower markets in gold today, but what was most interesting is the spread or the price relationship between the former April most active futures contract and the June. April closed right near spot at around 16.19, while the next outer month, June, actually closed at 16.42. And that's a pretty wide spread. The best explanation I can give is that the consensus and market sentiment currently concerning the coronavirus conflict and crisis is that it's going to be here for a while. Let's take a look at the price board and then to our technical studies. A very interesting way to start the week off in terms of the spread between different contract months. We'll get to that in a second, but first we are looking at gold futures. This is still basis the April contract, but people are now moving over into the June contract. And the way to see that is take a look at the volume. I've just put that up, and it is sitting at around 100,638, and that obviously is very, very low volume. When we look at the next month, and that's going to be June, you'll see that that is now at 153,000. But what is most interesting to me is when we take a look at the price differential between the June contract and the April contract. Now, we're looking at spot gold down 365 at 1622.50. When we compare that to the April, that's at 1617.90. But when we go back to the June, we're up at 1643.40, down 1070. That is a tremendous spread between those two contract months. One possible scenario might be that as they're switching into the new contract month of June, you've got an increase in volume, and that could easily bring that bid-ask spread higher. And the other thing is the belief that the current crisis with the coronavirus is going to sustain itself for a period of months and not weeks. And that's why we might be seeing that differential. But it is absolutely worth noting because our next trade will be in the June contract. In terms of some of the other precious metals, we had platinum trading lower today, $21 lower at $7.19. We had silver giving up about 2.25%, about 33 cents at $14.20. And then the Lone Star, obviously, once again, is palladium. Unchanged in essence, but sitting at $21.99, and that puts it up $2.60. We have seen a defined turnaround in the dollar market because that traded up about 0.6%. Before we take a look at our technical studies, I do want to show you that the platform we use here, which is eSignal, has just converted the continuous contract over to the June. You can see that in terms of the reflection of the price right here at 1639. And as we looked at before, when we looked at the other contract that was sitting at around 1619.70 down 230, that is the current print when we look at the April contract, which is J. That's why I said our next trade will be in the June contract month, which is currently at 1639.70. We are looking at the futures contract of the most active contract month, which is now changed to June. So as you see, we are now at 1639.10, a few dollars away from what we were looking at this morning when most active was still listed as the April contract. We have one basic Fibonacci retracement that we have in here, which basically starts from these bottoms right in here, but very, very closely matches the lows that we saw a couple of weeks ago that come in at around 1450. We have our tops set at these record tops that come in just above 1700 here and just below 1700 here. When we do that, we can see that the most recent low that came into the market, and this of course happened last week, came in just at about the 38% retracement level, which comes in at 1606. The question is, will we see the market hold this particular area and then move up? Will it consolidate, or could it move down? My belief is that it should consolidate a little bit but move up from this area. Right now we do have minor resistance at 1644. That is the 23% retracement, and I personally don't see the market going to either the 50 or 61% retracement, which is why I feel we want to look very closely to see if we get technical confirmation that what we're witnessing is a market that is about to move back into rally mode. Now, traders, today's decline in gold had a lot to do with dollar strength. We've been talking about dollar weakness all throughout last week. We can see that we had pretty much 5 consistent days ever since it hit these tops here where we identified a hangman and a doji as the indication of a top. We had that followed by 4 consecutive days down, and it is very close to being what is called a 3 gaps. Now, in this case, it is a bullish 3-day gap because what we're witnessing is gaps between the real bodies here, pretty much the same here, and here also equal. But when you experience 3 gaps on lower closes, lower highs, lower lows, that's considered an exhaustion pattern, and it typically means that the trend that was intact, meaning the bearish trend, has kind of run out of steam. The second thing about the dollar is that if we look at the close on Friday, it did close just below the 50-day moving average. Today it opened below the 50-day moving average, but closed well above it. And of course, dollar strength would indicate that gold has much more to overcome, even if it moves back into rally mode. So, based upon recent activity in gold, in which we have seen it under pressure after hitting these highs just shy of 1700 and then breaking down to 1606, which is the 38% retracement, and the fact that today it closed under the 23% retracement with dollar strength, tells us that our best possible scenario is to be flat with no active trades in gold or silver until we get technical confirmation that a pivot has occurred. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.